Good morning, everyone, and I want to welcome you to our 46th episode of In Conversation with Convergence. My name is George Evans, and this is a monthly podcast where we feature our clients and some very special guests. We help you get to know the market. We help to get to know the market leaders and some of the top issues facing the industry. I'm joined today by an old friend, Joe Fisher, and Joe is a senior lead partner at KPMG. And from what I've seen and know, I think Joe is very much a recognized expert in the alternatives industry. Joe, I really want to welcome you and thank you for making time today.
George, thank you, and thank you for having me. I do appreciate our partnership that we have with KPMG and Convergence. It's
Yeah.
going very well, so thank you.
Yeah, thank you. Thanks. I agree. I think we just keep looking for ways, both of us, to add value, right? People know you. I think it's always good to introduce a little bit about yourself and your pedigree, and just tell our audience, a little bit about your background.
Thanks, George, and thank you for the word infamous. I won't forget that next conversation we have. Thanks again, George. I'm Joe Fisher. I'm a senior lead partner at KPMG. I have over 30 years of public accounting experience, and just thinking about it, this is my 32nd busy season that we're in currently right now. It's February and we are busy. I focus on audit, specifically alternative asset management, private equity, hedge, venture capital, and what I would call hard to value type securities.
Mm-hmm.
Many folks don't realize this, but I started my career auditing banks and broker-dealers. And during that time, I audited a large investment bank / broker-dealer that was known for mortgages. And I quickly learned how to audit mortgages and account for mortgages. That transitioned into my career in alternative asset management because I wound up auditing one of the largest mortgage-backed securities funds in the world at the time. Over the 30 years, I've had various leadership roles, and I currently serve as one of the asset management growth leaders sitting in the Northeast. And in that role, I do set, monitor, and drive our growth strategy. I'm also known as a subject matter expert, and in that role, I consult with various engagement teams on various audit, accounting, valuation issues that might come up. I am one of the firm's transition specialists. In my career, I have transitioned numerous fund complexes with AUM combined greater than $150 billion. I transitioned them to new audit platforms. George, just a selfish plug. I am a global board member of Help for Children, formerly known as Hedge Funds Care. That charity's sole mission, it's one of my passions of giving back. This charity's sole mission is the prevention and treatment of child abuse. It's a special year for the charity. We're having our 25th anniversary gala this year. I want to give a shout out to my co-chair and the steering committee and the Committee of Hope. That's or Committee of Hearts, excuse me. That's the fundraising committee. Hopefully this year, the gala has the highest raise ever. The gala is May 20th, 2025. If you want to learn more information, again, I told you it was a selfish plug.
No, it's good. And I think let's talk about KPMG, though, right? Believe it or not, you won't believe this. You might know this, but there's over 500 audit firms named in SEC filings. And it's probably the 90-10 rule where all the business is. But everybody knows KPMG, everybody knows Big Four. But talk a little bit about, I want you to do two things if you could. Talk a little bit about a KPMG, a brief overview. And then what do you think, if you and I were taking an elevator ride, what's that elevator pitch on KPMG? What kind of differentiates the firm?
Super. Let's start just a high-level overview of KPMG. We're a Big Four accounting firm, approximately 273,000 people worldwide. We're in 142 countries. We are a multidisciplinary firm. We go to market both audit, tax, and advisory. Asset management, where I'm sitting right now, is a firm priority. It happens to be the largest industry sector here at KPMG. And we've experienced double-digit growth over the last number of years. So we're very happy and proud of that. Our this asset management practice that I'm in, we audit public funds, advisors, hedge, private equity, venture capital, credit funds, including real estate funds.
Mm-hmm.
I would mention that we are the market leader in serving crypto and digital funds, as well as we are a market leader in serving sovereign wealth funds. One note that I would like to make: the HFM has awarded us 5 years in a row now best overall auditor. So we're very proud of what we're
Yeah,
doing with our practice.
that consistency is super important. How about
5 years in a row.
Yeah, how about differentiation, right? The old days, everybody would say, "Hey, if you go to the Big Four, it's like buying IBM, right?" Like, what makes KPMG different in your mind?
I'm happy you made that, and I'll come to that very shortly. The IBM comment. Um, our elevator pitch, and this is what I truly believe. It's our technology, our technology tools, and our risk-based approach. Everyone can say technology. Well, our technology here, I'll give you the high-level overview, and I know we're going to talk about AI in a bit, but we have the technology right now where you could value, test ownership existence, realize of your portfolio, test realized gains and losses, and roll forward costs in a matter of minutes. It's truly tremendous. The next thing I'll talk about is our people. What differentiates us with our people is their expertise, their responsiveness, they're proactive, and we give them the tools to be nimble. And this is important, especially the rate of pace that our environment's in. We empower our people to make decisions in the field.
Yep.
And I can say that some of my competitors do not do that. We do not operate in a black box. Let me give you two examples. What that really means is valuation. Sometimes we have to call in our quants and our model experts to help value hard to value private equity type investments, esoteric type investments. Our valuation team is part of the audit team. The auditors have to sign off on that valuation anyway, and they face off directly with the audit team and our clients. And I can tell you that not a lot of our competitors operate like that. Secondly is national office. You hear about national offices, it's usually in a negative tone.
Yeah.
Not here at KPMG. You go to national office when there's a big issue and it's gray and you need some documentation, you need the right cutting edge type help. Depending on the size of the client, we have a national office liaison program. We'll have national office practitioners assigned to our team. And if there's an issue, we go right to them. They have the direct dial to national office, but they also have an inroad to our client, so they can liaise between the client. They face off with the client and our national office. You mentioned IBM, great firm. And you think of Big Four and you think of what an IBM. That's not true here at KPMG. We're going to give you that boutique firm feel. You're going to have a lot of partner, director, senior manager involvement on your engagements. That's the way our operating model is built. So you're going to have that boutique firm feel, but then you have that global breadth and depth of KPMG. In conclusion, I would say, you think about KPMG, especially asset management, high touch, high technology.
Yeah, no, good. That's well said. And that's a good segue, right? I know we wanted to talk a little bit today, you and I, about AI, right? So obviously everybody's talking AI. It's something we've been doing for years with some of the work we've done and the algorithms we build and the business intelligence, right, that we bring to the table. But I'd like to hear about, kind of the AI efforts at KPMG, Joe.
They're just like you. We've been working with AI for many years. Overall, we believe that it'll improve the quality and insights that our professionals can glean from their audit work. I have to acknowledge, though, that we need to train and teach our people and enhance their skill sets to fully leverage AI. So that is well underway right now. I think what differentiates KPMG is our approach to implementing AI technologies. We're doing it through strategic partnerships, responsibility and governance, and it's a cross-functional coordination. What I mean by that is it's audit, tax, and advisory playing together. Now, for example, talking about strategic partnerships, we have entered into a $2 billion, that's a B, $1 billion relationship with Microsoft that I know some of our competitors cannot enter into. And we're very proud of it and what we're doing with AI right now. Now, I just talked a lot about AI, threw some words out there. What does it really mean? I'll give you some examples. So, you talk about AI and, auditors we have data all over the place. Let's give you a couple of quick examples. We're able to gather, let's call it financial statements. Let's call it a couple of hundred financial statements. By typing in a couple of queries and pressing a button, we are able to find out which of those financial statements, and we're talking could be hundreds that we do this with, which ones are US GAAP, which ones are IFRS, which ones are OCBOA, other comprehensive basis of accounting, which ones have off-calendar year ends, what are the different fees. We're able to, typing in queries, we were able to get responses within a matter of seconds.
Yeah.
That would have taken days to compile that information. I saw a stat here, and I have not audited the stat, but it saves something like 3 days a month for our practitioners using AI. Now, that stat has not been audited, but that's something I just recently read. Just giving you another quick example is extracting terms from a document. Now, let's just something simple. You're on a real estate type client. It could be an investment advisor that has a lease agreement. Lease agreements could be 50 pages long. You import the lease agreement to our firm-wide tools, and maybe you type in your query. Maybe you want to understand what are the key terms. What is the amortized rent payment over the following 10 years, taking into account free rent and maybe rent escalation.
Yep.
We're able to have AI perform that function within a matter of seconds.
Yeah.
And then the last one I'll give you just is anomaly differences. And I'll talk about valuation. We have a set of, let's call it bonds, and we think that they're going to be valued and throw off some interest a certain way. We're able to put it into our systems and spit out outliers. So it helps us really risk-based approach. Now, I use the word it helps us. How does it help our clients? We're able to share some of this information with our clients and, during the audit, throw out or present their portfolio population and say, these are the outliers, both above our expectations and below. So they're able to be part of the process, and they love the information. That's our feedback right now.
Yeah, what's interesting is it's an interesting few examples because to me it's all about with the lens we look through, right? It's all about the business intelligence that you get, then the trends that can be done with AI, and both from a time series and even a forward-looking perspective, right? Like, give you a simple AI example here, Joe, right, which we've talked about. We do predictive analytics now on new launches. What advisors are going to launch funds based on 12 years of launch history, and we're getting it about 72% right. So it's the things. I think we're just at the beginning of what you can really do with this, because it's very impressive, some of what I've seen firms like yours and ours are doing with AI. All right, I'm going to switch gears. Keep us moving. I want to talk about the new administration, right? So, and we're not going to be Republicans or Democrats. We're just going to talk about the administration. We're about 8 weeks into this new administration. And so I wanted to get a view from you on, a KPMG, Joe Fisher view on what do you think the impact so far of the new administration is, in the industry from your perspective?
So, Joe Fisher view. So I want to be clear that this is just my view, and not that of the firm. I'm not a lawyer, but I just know that. Let's start new administration. It's 7, 8 weeks in. Let's start with regulation. Um, this new administration, I do think, and what we're seeing out there is going to take a deregulatory approach. I would note that this has been in the works, though, for 6, 7, 8 months now. Back in, I want to say it was June of 2024, we had the Fifth Circuit Court of Appeals strike down the private funds rule. So this has been in the works right now. I do see a regulatory pivot, a friendlier pro-crypto,
Yeah.
pro-digital asset environment. You can read that in the news right now. And even last week, I think there were articles out there, there's press out there, about the SEC planning to drop their lawsuit against Coinbase. That was just, I think it was last Wednesday or Thursday. As a practitioner and a professional, although we're potentially seeing a softer regulatory environment, or what I'll call it a deregulatory approach, I do think investor managers still must remain vigilant and continue to maintain and have sound compliance and robust systems of internal controls. So because we're going to a deregulatory environment, compliance should not be taking their foot off the gas. Next thing to talk about is tax.
Yeah.
Well, there's not much detail as of yet. I did see the news coming from the White House probably a couple of weeks ago, and this was not mentioned on the campaign trail that I'm aware of, potentially ending the carried interest tax break for private equity fund managers. That's in the news again. It's been in the news, but it's definitely in the news again. So we should, practitioners out there should continue monitoring the tax legislation as it progresses. That same day, another mention coming out of the White House was ending special tax breaks for billionaire sports team owners. I know sports team owners has been a growing asset class for some of our private equity fund managers. But I don't have much detail on it, but it was news coming out of the White House. Again,
which, by the way, not to interrupt, I thought it was interesting, right? Because I gave a talk on this in Las Vegas in the fall, and as you know, the NFL just allows owners now 10%, right, investment by outside ownership, and so but there's been PE investing in other sports for a long time, Major League Baseball, soccer, European soccer, rugby, right? So it's interesting. I think the first thing you said is the right thing. I think it's very early on the tax front to really have any kind of solid view on what this administration's tax agenda is going to be yet, right? It's
coming out of the White House. I don't have their details were yet to be to be followed.
Right. Let's go to
but George, when you talk about tax, tax, you think negative. Let's talk about a positive note. There was mention of expanding the state and local tax deduction, the SALT deduction, which is great news. And that, living in the Northeast, I look forward to that one.
No, that's a good one. How about ESG, Joe? I wanted to get your view on that too, which is a little murky.
My view is I think the new administration will roll back and amend some of the SEC rules promoting ESG disclosure. And this will create a dichotomy between the current disclosure rules that are in Europe right now compared to the US. So there will be a difference on that, potentially a difference on that. George, I think, with this new administration overall, we're going to see a greater flexibility and reduced regulatory burdens, which should promote growth and investment opportunities. But again, Being an
Yeah, I
auditor,
mean,
I have to still mention the strong compliance and risk management practices that have
well,
to be
see,
involved.
that's the thing. It's the whole thing to me, and it could be a whole separate podcast, right? It's kind of a double-edged sword, right? While it's going to open up the market for growth, it's important that there still is some oversight in all the right areas, and enough said on that. I like to always to go to the marketplace, right, Joe, and maybe I'd like you to comment on a couple things. One, let's just talk about the market overall, right, these days, and then I like to always get into kind of from a KPMG lens. What are some of the headwinds and what are some of the tailwinds you're in terms of the business, right? But why don't we start with kind of your view of just the market itself?
High level market overall. Last 2 years, what's called the broad indices, have seen tremendous growth, double digit growth. The S&P alone was up 20+%. I know, just talking to my personal broker, can it continue? And he's in the process of resetting my expectations, right? Probably rightfully so. So I think we need to reset our expectations. Don't get me wrong, I'd love another double-digit growth year. We are seeing more of the democratization of alternatives. I think this is good for the market. I think it's good for investors. It has expanded the eligibility so more investors can get involved in alternatives. But now, your investment managers, although there was positive performance, there's still a drag and focus on operating margins. George, these are the same questions we were asking or talking about, a couple of years ago.
Yeah,
Outsource versus insource is still coming up.
yeah,
What functions can we outsource to save money or bring inside and put in technology to create some efficiencies? But then you got to do the cost benefit analysis. Technology is expensive. I do see the big getting bigger.
yeah,
We've been talking about this for a decade now.
yeah. I agree.
This year you have a BlackRock acquisition, you have TPG acquisitions. The big are getting bigger, and you're seeing strategies converge. Some of these larger shops, and you see it, George, have a menu of product offerings.
Right.
But one thing that is sticking out right now is this war for talent. And I'm going to parlay it into the big getting bigger. The big getting bigger have a war chest to hire talent. When I say a war chest to hire the right talent, and finding the right talent right now is key. Do they have the right skill set? But big getting bigger, offering larger, more investment products to their suite of offering, as well as having a war chest to hire. A war chest to hire the right talent, I think, is going to be
Yeah,
out there for the next
and
couple of
people
years.
often thought the war for talent was kind of a COVID thing only, and I don't think it is to the point you're making, right?
Agreed.
I think
And
that I think that the bigger are benefiting from that war on talent in general. So
and George, just talking about the war for talent, and when we spoke on our last podcast, let's call it 2.5 years ago, we talked about return to office, and that was a hot topic coming out of the pandemic.
yeah,
It's in the news again.
yeah,
Some firms out there said they want their people in the office right now. And during the last podcast, I had shared views that the employees coming out of the pandemic had the power; they can dictate where they want to work. We can talk about, learning, mentoring, growing, especially some of our younger professionals and practitioners. I told you that pendulum was going to swing to the employers, and I think it has swung back, not all the way to the employers, but you're starting to see more and more firms require more time in the office. Now, I talked about learning and building camaraderie and team. I agree with 100% of that. Don't get me wrong, I don't miss my commute, but I have to do it. And as you can see, I'm in my office right now. One thing I would mention, I don't think it's enough airtime, is efficiency and effectiveness of all being together. I could just walk into one of my team members' offices or cubes and just ask a quick question without setting up a
right,
Teams meeting, getting on their calendar, finding them. It's a lot more effective
yeah.
and efficient.
Yeah.
You know, one of the new questions that's coming up is how can technology, in particular AI, for our funds out there, how could that be more? How could they use it more effectively and efficiently in both investing and from an operations perspective? So you mentioned it before. You know, everything's changing right now. We are rapid change right now, and you got to keep up with that change. But AI is creating some of that change.
Yeah. No, and there's no doubt. So, how about talk to me a little bit about just a few comments on, and we're talking still about headwinds. When we don't have to go through them all, but when you look at PE and you look at hedge and you look at debt and you look at secondaries. Well, any thoughts, Joe, just on the headwinds continuing on those fronts?
Start with. Let me go through a couple of asset classes. Let's start with private equity. There's stats out there, George, that they expect private equity AUM to double by the end of the decade to become a $12 trillion industry. Um, and I'll just give you, my pulse on what I see out there, which you just my thoughts and what I'm seeing. It's private equity, good momentum. M&A is on the way back. You're hearing the positive enthusiasm. You could just hear it in M&A deal makers' voices. They want to transact. PE wants to transact. We're seeing energy, infrastructure,
Yep.
data centers, AI data centers, and let's talk about power as well as health. So we're seeing private equity strong momentum. The strong pipelines. I think we're in for a nice upturn.
Yep. Agreed.
Hedge. Same stats. By the end of the decade, you know, could the industry, some of the stats I've seen out there, could the industry become a $5.7 trillion industry now? That would be a 4% CAGR. We're seeing, I talked to you, good performance in 2024. That's a positive. Fundraising is still a bit tricky, and it's taking time for those investors and allocators to cut a check or send a wire. There's time delayed. And I could tell you over the last 4 to 5 months, and this is as of right now, and this time frame is usually slower, but we're seeing startup launches have subsided a bit. I don't know if
Yep.
people are waiting to get their bonus, but I can just tell you right now that we're seeing, startups slow down a bit. I'll say about 4 or 5 months.
Yep.
Let's talk about private credit, private debt. Interest rates are enhancing returns. I can't predict what's going to happen with the interest rate environment, but I did mention deregulation. I think deregulation could boost M&A activity, which would help private equity,
Yep.
but it could also provide more opportunities to lend. So I think that's in a positive spot. We're going to talk about. I'm assuming we're going to talk about tailwinds soon, but I think private debt, private credit, and private equity. I think middle market investing is probably a strong place to invest right now. And why? It's because those who don't rely on the global supply chain and don't have to worry about tariffs on imports and exports. I think they're going to be they're well positioned. Secondaries remain strong as LPs are facing some liquidity constraints. And we're still seeing some GP stakes still have positive
Yeah.
momentum.
Yeah, yeah. Well, let's finish, and I agree with all your comments. Let's finish up here with then the flip side, some of the tailwinds, right? Where the wind's at your back here for as we go into, we're well into the first quarter of, actually the first quarter of 2025 is almost over. It's hard to believe, right? I'm scheduling April meetings, right, already, right? But what are you thinking as you think about tailwinds coming into 25, 26?
Again, George, my view, nothing shocking here. We still got to watch inflation trends. It's not going away. Tariffs, news coming out of the White House, especially that I mentioned, especially companies that rely on the global supply chain.
Right.
How can you not talk about geopolitical concerns? You don't know where the next problem is going to be, and I hope there's no problems, and I hope there's worldwide peace. But you never know where the next problem is going to be. That's going to downturn the market. Got to keep our eyes on interest rates. I just don't know which way they're going to go. I've been hearing conflicting reports, and interest rates rise. We got to worry. It's good for credit and debt. You worry about default trends.
Yeah.
And to
Yeah.
say
I
the
mean,
least,
listen, you make a good point. Like, I think, some of the, I'll just call it economic turbulence potential is out there, right? Your big trade partners, Mexico, Canada, and then you kind of go overseas, and those firms that have, supply chain, impact. I think it's going to be a very interesting year, but I actually think um, I think the table is going to be set, good or bad, on certain fronts in 2025, right? You can the pieces are all moving, but you can you're starting to see some trends, and again, I think the people are looking at just better balance, right? Some of it, right? With some countries that nations we deal with, right? So, but I think, listen, I think when I think of the industry we're in, you and I, right? I am as bullish as ever about alternatives, right? I think you mentioned, democratization. I think that's a massive opportunity for service providers, for not only for the asset managers, but for the service providers, right? Whether
we're
you're
seeing it.
not,
We're seeing it right now.
yeah, whether you're an audit firm or a fund administrator, or right, there's just a fintech company. There's an enormous amount of opportunity, and then that market will just grow. That alternative market could be massive because of the democratization, right? So I actually, it's interesting to think, right? As I'm a little older than you, but that you could now be picking hedge funds in your 401k plan, right? Right? I think it's just not where we kind of grew up. So I think it's an exciting time. I think my point would be, I think it's a very exciting time for this industry, and there's
Agree, and
opportunities galore
yeah,
if you
it's I
harness them.
think enormous time for change of change. Change is happening. We'll call it at the speed of sound. The question I ask is, can you keep up?
Right.
Can investment
Well,
managers keep up
listen,
and stay ahead of change?
like anything else, the winners will be the ones that keep up, right? And
Absolutely.
right. So, all right. Well, listen, I have always enjoy talking to you, whether we're on a video or not. But I want to thank you for doing this today. I want to thank you and you mentioned it right at the beginning, for the great partnership Convergence has with KPMG. You've made us better, and we're very appreciative of that. So I really want to thank you for your time, Joe, and your insights today. I thought it was a great conversation. So thanks.
George, thank you for having us.